Hey ChainMind community, get ready, because this week in crypto has been nothing short of a roller coaster ride. From Bitcoin's wild price swings and its rise in the global monetary ranks, to Ethereum ETFs making serious waves and central banks quietly stacking crypto, there's a lot to unpack. We'll also dive into how major institutions are positioning themselves, groundbreaking developments from Apple and MetaMask, and so much more. This is one video you definitely don't want to miss if you're serious about staying ahead in the crypto game. If you're new here, make sure to hit that subscribe button and ring the bell to stay updated on all the latest trends, news, and insights in the crypto world. Let's kick things off with a quick overview of Bitcoin's price movement this week. Bitcoin had quite a bumpy ride, starting the week around $60,000. Sunday brought a bearish turn, with BTC dropping from $61,858 to $58,712. As the week progressed, we saw a brief recovery, only for Bitcoin to plunge further to a low of $56,078 before settling into some sideways movement. These price swings are a stark reminder of crypto's volatility, but also present opportunities for those ready to act. Now, onto a major milestone. Bitcoin has now solidified its position as the 6th largest global monetary asset, with a market capitalization of $1.19 trillion. This isn't just a symbolic achievement, it reinforces Bitcoin's growing legitimacy as a store of value, on par with traditional assets like gold. For investors, this milestone is a strong indicator of Bitcoin's potential as a long-term hold. Next, let's talk institutional interest. Major financial institutions are increasingly buying into Bitcoin ETFs. For instance, Goldman Sachs, which manages $2.8 trillion in assets, holds the most Bitcoin ETF shares among US investment banks, with Morgan Stanley $1.5 trillion AUM and Wells Fargo $600 billion AUM, also holding substantial positions. Specifically, Morgan Stanley reported $269 million worth of GBTC shares in Q1 2024, while Wells Fargo held $120 million worth of Bitcoin ETFs in Q2. Even JP Morgan Chase, with $2.9 trillion AUM, reported holding around $1.4 million in spot Bitcoin ETFs, although this is down from $2.7 million in Q1. This growing institutional participation could drive further adoption and bring more stability to the market. Ethereum is also making headlines. The first positive net inflows into spot Ether ETFs since their launch in July totaled $104.8 million for the week beginning August 5th, with a total trading volume of $1.9 billion, pushing net assets to $7.3 billion by August 9th. Despite a 23% price drop for ETH in early August, these inflows suggest strong confidence in Ethereum's long-term prospects. Leading the pack was BlackRock's iShares Ethereum Trust, with $188.4 million in inflows, now totaling over $900 million in just 13 days of trading. This influx of capital into Ethereum ETFs highlights the growing institutional interest in the asset, which could lead to a price rebound as confidence builds. El Salvador is continuing to push its crypto agenda forward, securing a record-breaking $1.6 billion investment from Yieldport Holding. This funding will modernize the port at Acajutla and construct a new port at La Unión, the planned location for Bitcoin City. This strategic development highlights El Salvador's commitment to integrating cryptocurrency into its economic infrastructure. By positioning itself as a global crypto hub, El Salvador could attract more investments and foster innovation, making it a model for other nations considering similar moves. The price action of Bitcoin is drawing parallels to the summer of 2023. If this pattern holds, we might see a few more weeks of sideways movement before a significant rally in Q4 or Q1. Historical patterns like this can provide valuable insights into potential market movements, so it's worth keeping an eye on the charts. For investors, this might be the calm before the storm, offering a potential buying opportunity before the next big move. If Bitcoin and Ethereum break above $70,000 and $4,000 respectively, it could set off what Bitcoin billionaire Arthur Hayes calls a sexy shitcoin soiree in the altcoin market. This potential breakout could lead to a surge in altcoin prices, making it a crucial time for investors to review and possibly adjust their portfolios. In other news, Binance has re-entered the Indian market after settling a $2.25 million penalty with the Financial Intelligence Unit, FIU. This move is significant for the Indian crypto community, where Binance is widely used for trading. By resolving its regulatory issues and complying with local laws, Binance is likely to regain the trust of Indian users, which could lead to increased trading activity. This development could also encourage other exchanges to follow suit, leading to broader market participation in India. On the tech front, MetaMask, Mastercard, and Binance have launched the MetaMask card pilot, allowing users to spend their crypto directly via Mastercard. This initiative is a major step towards integrating crypto into everyday commerce, making it easier for users to spend these digital assets in the real world. By reducing the friction between crypto and traditional finance, the MetaMask card could lead to broader adoption of digital currencies for daily transactions, especially if the pilot is successful and expands to more regions. Central banks are also getting into the crypto game. Norway's Norges Bank and the Swiss National Bank have bought significant shares of MicroStrategy, effectively gaining indirect exposure to Bitcoin. Norges Bank purchased 1,123,930 shares, while the Swiss National Bank acquired 466,000 shares. This move reflects a growing trend of central banks diversifying their portfolios with digital assets, particularly Bitcoin. Such institutional involvement could further legitimize Bitcoin as a store of value and encourage other financial institutions to consider similar investments. Now let's talk about Dubai, where the judiciary has made a landmark ruling by recognizing the payment of salaries in cryptocurrency under employment contracts. The Dubai Court of First Instance has set a groundbreaking precedent by validating cryptocurrency as a legitimate form of salary payment. This decision marks a significant shift in the UAE's approach to digital currencies, signaling a progressive stance towards integrating crypto into everyday financial transactions. For the crypto industry, this ruling could pave the way for broader adoption and acceptance of digital currencies in the region and beyond. In another significant move, the US government transferred approximately 10,000 Bitcoin worth around $593.91 million from its wallets on August 14. This transfer, part of the funds seized during the Silk Road raid, follows a previous move of 29,800 BTC in July. Such large-scale transfers by the government often create ripples in the market, leading to speculation and sometimes panic among investors. These moves remind us of the substantial holdings governments have and how their actions can influence the crypto markets. Apple is making waves by opening its NFC chip to third-party apps with the release of iOS 18.1, enabling direct blockchain payments on iPhones for the first time. This groundbreaking move allows Tap to Pay on iPhones to support stablecoin USDC, a significant step toward integrating crypto into mainstream commerce. Circle CEO Jeremy Allaire announced that USDC would soon be available for Tap to Pay transactions, potentially revolutionizing how we use crypto for everyday purchases. This development could extend beyond USDC, enabling payments with other stablecoins and even NFTs, leveraging high-performance blockchains like Solana and Avalanche for seamless, low-fee transactions. Apple's decision to democratize NFC access could be a game-changer, making crypto payments more accessible and widespread. Crypto.com has also made headlines by becoming the first and exclusive cryptocurrency platform partner of the UEFA Champions League. This partnership will bring unique experiences to fans by integrating cryptocurrency into the world's most popular football league. The collaboration includes in-stadium activations, broadcast integrations, and innovative advertising campaigns. Crypto.com's branding will be prominently featured, starting with the UEFA Super Cup on August 14th. This partnership not only enhances Crypto.com's brand visibility, but also signals the growing intersection between sports and crypto, potentially attracting millions of football fans to the world of digital assets. In another development, BlackRock has overtaken Grayscale as the largest crypto fund manager, with its IBIT ETF growing to $21 billion AUM since its January launch. Grayscale's ETF fund, meanwhile, has experienced $2.3 billion in outflows since US Ethereum ETFs began trading. This shift highlights BlackRock's growing dominance in the crypto fund space, signaling a significant change in the competitive landscape. For investors, this could mean more options and potentially better managed funds as competition heats up among these financial giants. South Korea's National Pension Service (NPS), the third largest public pension fund in the world, has just purchased nearly $34 million worth of shares in MicroStrategy, a company known for its significant Bitcoin holdings. This brings NPS's total investment in MicroStrategy to $33.75 million, as detailed in an August 13th filing with the SEC. The NPS also holds over $51 million in Coinbase shares, $31.5 million in Roblox, and $61.5 million in Blockcheck Dorsey's company. With MicroStrategy's stock up 92.5% in 2024, this investment reflects the growing trend of institutional investors seeking exposure to Bitcoin through corporate stocks. As we all know, Ethereum is a strong backbone of many crypto portfolios, and there's good news for ETH holders. Top analysts and fund managers have priced Ethereum at an average of $6,404 by the end of 2024, with predictions ranging from $4,400 to as high as $166,000. While these predictions vary, they all share a bullish outlook for Ethereum, highlighting its potential to appreciate significantly in the coming years. For ETH holders, these predictions offer a glimpse into the possible upside of holding on to their tokens as the market matures. Former President Donald Trump has disclosed owning up to $5 million in Ethereum-based crypto assets and has earned over $7 million from his 3 NFT collections. This marks a significant financial gain for Trump, who has increasingly embraced digital assets as part of his 2024 election campaign. Trump's involvement in crypto adds a new layer of mainstream recognition to digital assets, potentially drawing more attention and investment to the space, especially among his supporters. Finally, let's talk politics. Senator Chuck Schumer has pledged to introduce pro-crypto legislation by the end of 2024 if Kamala Harris is elected president. Speaking at the Crypto for Harris event, Schumer emphasized the need for the US to foster crypto innovation rather than pushing it overseas. This political support could be crucial for the future of crypto regulation in the US, potentially creating a more favorable environment for crypto businesses and investors alike. And that's a wrap for this week's Crypto Roundup. The crypto landscape is constantly evolving, and staying informed is key to making the most of these changes. If you found this video helpful, make sure to give it a thumbs up, share it with your friends, and let me know in the comments which news item you're most excited about. As always, keep your eyes on the charts, your hands on your crypto, and your mind in the game. See you in the next video.